We're here to make money. We are not here to create art or to do anything else. We are trading to create wealth. But in order to create wealth, we have to do a lot of different things. We have to do a lot of things differently. We have to take care of our bodies. We have to take care of our spirit. We have to take care of our emotions so that we can continue to bank financial capital. 90% of traders fail. So why do I want to think and act like 90% of traders? I don't. So along the way, while I'm making money, I protect the beginning balance of what my account statement said, and I take that next trade and I do the same. I protect that and I move on from there. These event contracts play into Capital Preservation Friday, I think, in a very beautiful way. There isn't a lot of risk when it comes to it. It's set risk. The strike prices come about, and we know what we're going to do when that happens. That is just a beautiful way of managing your risk. I know that I'm not going to spend more than $1, $5, or even certainly more than $20 on the top end. Cannot lose possibly more than that. But I have the ability to be able to make $20 on a 50-cent bet or a $1 bet or a $5 bet. I don't know where everybody went here. They seem to be alone, and I'm a little bit thrown off with all of this. Okay, well, I'm just going to keep going. So the event contracts the event contracts are, everybody has been talking about them this week. So it's nothing to. It's something that I'm learning. It's new to me. CME is not going to issue a new product unless they've done their work on it. So this is much more than it's much more than just something quick to make some money. I believe that there's going to be a strategy to it. I just have to kind of figure it out. I am glad that I trade the opening range, because obviously the opening range gives me the ability to be able to take money out of the market on a daily basis. But the opening range, when the market opens in 20 minutes, I'm not going to have to guess as to what I think that the market is going to do. The market will tell me. So, for today's, I can't share screens or anything because I don't know how to do this. But today we're trading right now at 36.61. The strike price is, do we close above 36.75? I would take that. I would buy those for 50 cents right now. Do we close above 37.25? I'd buy those for 50 cents right now. There's a lot of different reasons for this market to rally. Now, on the other hand, once the market opens, if we start lower, I would sell. I would take the nose, which are more like puts, right? I would take the nose that the market is going to close under 36.25. If the market starts lower under the opening range, we're going to close underneath there. Those of you who follow me on Twitter know that a big price that I've been paying attention to since June of this summer is 36.63. So we're trading around that area. We're going to open above that, or we're going to open at it. If we trade above it, we're going to trade to these higher strikes. If we open below it, we're going to trade to the lower strikes. Same thing with the Nasdaq. The Nasdaq has a lot of very, very important levels down here. Right now we're trading at 11,253. The Nasdaq has a lot of reasons to stop down here at the 11,000. Let's see what the strikes are. The 11,130 to 140 level. Now, do we close above 11,130? Right now, that's a wash bet. You're not going to make any money on it, but let the market open. And if we start lower, we might have some nose to take there. And those are 50-cent bets to close below 11,130. Let the opening range set. Let the market tell you where it's going to go. These event contracts are kind of like trading a one lot. You have to be right, but your risk is hedged. When your risk is hedged, you have the ability to be able to make a lot of money. And that's the point of Capital Preservation Friday. Capital Preservation Friday is a reminder that I've got to manage my accounts properly. I must manage my mind properly. I must manage my spirit properly. And I must take care of my body also properly. So if I've made money this week, Don't try to do too much in one day. I'm not going to, if I made $1,000, I'm not going to try to make 5 just because I'm up money. I'm not going to size up just because I can. I'm going to take that money out of my account. I'm going to properly fund my tax account, and then I'm going to move on from there. And don't ask me about taxes, please. I'm not a CPA. Consult a CPA who knows about futures and how they work. These event contracts, by the way, are taxed according to Section 1256, which is the 60-40 long-term, short-term capital gain split. So they're taxed just like futures, and that's another benefit of these, a huge benefit of these event contracts. Preserving your financial capital. But in order for me to make money, to be a long-term trader, whether I'm trading futures, I'm trading the names, or I'm trading these event contracts, I need to be able to manage myself properly. I need to be able to manage my not just my risk and my profit. There's 2 points to every trade: managing your risk, managing your profit. Most traders never learn how to properly manage their profit because they're so concentrating on managing their risk. This is a way to learn how to, these event contracts are a way to learn how to manage your profit. Are we going higher? I don't know. The opening range is going to set that for me, and then I'm going to know. So again, in the Nasdaq today, do we close above 11,330? I think we do. So I'm going to buy those. Right now they're cheap, so I'm going to buy those. Do we close above 11,580? What's one of the other things that I say constantly on Twitter, especially on Fridays? Don't fade late day Friday strength. Conversely, don't fade late day Friday weakness. If this market opens up and we start higher and we find some legs, manage your mindset right. Don't get too married to any particular price. Don't get too attached to any particular opinion. Let the price action lead you. Let the market guide you. So you can take these for 11,130 or 11,330. I'm sorry. In the NAS, maybe, certainly. We start up above, absolutely. We start working above the opening range. S&P, again, I want to make these clear. I want to make this clear. 36.63 in the SPOOs are a very, very important level to me. So do we close above 36.75? Again, if we start up, we will. Now, everybody's been poo-pooing the poor Russell. The Russell's been getting beaten up by everybody. Everyone thinks that the Russell's going to zero. It's going lower. I wouldn't take the yeses. I wouldn't take them. Let's take a look at some of the Russell strikes. I don't have the strikes up. I have the strike prices. I don't have the yes/no value. But the Russell right now is trading at 1683. There's a lot of support in the Russell here, 1664 to 1677, 72. This whole general area to me is a big level of support. If the Russell starts weak and starts below this level, underneath the opening range, then I think that we do. I think we take the nose on the oh gosh, the Russell for some reason is not loading for me. But I do think we take the nose on that. Now, if we start higher, above 17, if we start above the opening range here, we start to work above 1700, then I'm looking for 1720 in the Russell. So I would take the yes there. These markets are really volatile. They're giving us some great trades in between all of this stuff. You know, we have to then take that money that we've earned and we have to preserve it and go on to the next trade. When we can do that, we can build a career in this market, one trade at a time. Who's the audience for these event contracts? I think they're traders like me who stood on the floor for, I don't know how many years I was on the floor, 15 years. I traded on the floor for 6, 7, or 8. No, I started in 98 and I left in 2011 during MF Global. So we used to bet about where we would close. We'd bet on if there were 2 cockroaches on the ground. We'd bet on that, see which cockroach would race. I mean, there were all kinds of things. I've never placed a bet with a bookie. I don't play cards. I mean, I'm not a gambler. I don't see these event contracts as gambling. I think they're a fun sort of a way to be able to preserve capital while at the same time building capital. I've seen a lot of traders this last week or so all of the young traders and some of the older traders in the Place Your Podcast Network group. I've seen these guys make some money. I'm still waiting for my account to get funded, but I've seen some guys make some pretty good money here. These guys, they're from Anne Marie and Tracy down to Striz and Julia and Canny and Jimmy Jude and Anthony. Everybody who's been trading these things have been doing pretty well. So there's a lot of good things to be said about these contracts in the way of preserving capital and moving. This whole network, Place Your Trades Network, even though I've got technical difficulties here today, and bear with me, next week's show will be better. Even though that we've had all of these problems and these difficulties, I hope that you're sitting with me and you're listening anyway. I can't see any of the comments, so I hope nobody's busting chops here. But if you have any questions about any of the things that I've talked about today, please hit me in a DM or hit me publicly on Twitter. I answer questions, and I try to answer everybody that asks me something. But one of the cool things about doing this on the Place Your Trades Network is that I've gotten a chance to know a lot of the people a little bit, to a lot of the people that I follow on Twitter. Leo the Tiger, Job, all of these guys are such really, really smart people and really good traders. And just like we do on Twitter, we bounce ideas off of one another. Brian Shannon is somebody I met a few years ago. We bounce ideas off of one another. We learn from one another. I trade the opening range breakout. I always have since I was on the floor. I preserve my capital on every single trade that I make, and I continue to move forward. And all of those things, one trade at a time. I build my career one trade at a time. I maintain it one trade at a time. That's what I love about these event contracts. I can take it one strike at a time. Do I think we're going to trade above here? Do I think we're going to close above here? Will we close above here? Do I think we can? Will it? And then take the bet and let the market do what the market's going to do. I cannot spend more than $20, but I can sure make a lot more than that. This is the fun part. Now, of course, you can size up with these event contracts too. And if anybody knows me, I have no problem in sizing up. I go from a 5 lot to a 100 lot on the floor, and that's when the Nasdaq was $100 a tick. It was still the big contract. In a heartbeat. One of the bane of my existence as a trader on the computer screens, on the screens, is that I would find myself with too much trading, too much size on, because it's too easy to overtrade on the screens. Hence capital preservation. The event contracts are something that we go from one strike to the next, one trade from the next. So this is going to be a really fun. My son. I think about my 17-year-old son, who's a senior in high school. He's going to go to college next year, but he wants to build a career as a trader. He really wants to trade. He was a little bit young when things were rough for me and my family after MF Global, but he sees how every single day how I'm challenged to be literally the best version of myself through my trading business and through the PAX group. I am challenged every day to be better, to do better, to be better, do better, be better. I love how these event contracts make me think about where the market will not just be on the open, but where the market will be on the close. I've always said that I only need 3 things to make money as a trader. I need an open, I need a high, I need a low, and I need a close. If I've got those 3 things, then I can make money as a trader. The opening range is going to tell me where the market is more likely to go and where the market is more likely to close once the algorithms come in and start kicking it up or kicking it down. I can look at a chart like the best of them, and I do technical work, I do fundamental work, but I really do think that that these event contracts are something to pay special and close attention to. CME knows what they're doing. Trust me. I've been around the CME Group for many, many years. Tradevate is a really cool little company in the way that, not little, they're a very big company, but the way that they've partnered here with Place Your Trades is just it shows the network of futures traders that have each other's backs, so that something else I talk about is that nobody fights alone unless we choose to. There's a network of traders from Trade-Ovate to Place Your Trades network to all of the traders within it, to everybody who's listening today and that will listen to this podcast in the future. Hopefully nobody will listen to this one too much, but we'll listen to the ones afterwards once we were able to get all of the whether the technical difficulties, I'm sure, are probably on my side. I'm not a computer genius. I know how to click the mouse, I know how to put in orders, and I know how to OCO them and put in stops on the computer. That's an email. That's about all that's about as far as I go. All right. The Russell is a little bit weaker. I really don't have much of a feel for what the Russell's doing because it's sort of stuck in this short little range here. But above this level, the 16, like I said earlier, 1664 to 1677 level, I think the Russell has the capacity to be able to close above 1720, 17 even for sure, 1720 today. If we start lower underneath these levels, then I would take the nose on the Russell. I think the Russell is going to kind of lead the way down. Now, gold. Gold is an interesting market. We're trading at 1671 in gold. Are we going to trade above 1700? When gold finds its legs, I'm bullish gold. So if gold long term, not necessarily today, but long term, don't go out and buy something just because I say I'm bullish, or sell something just because I'm a little bit bearish on a particular day or a particular trade. I'm a trader. I can change my mind in 30 seconds, especially after the market opens. Gold is open, 7:20 Central Time. But 1671, if gold can get back up above 1682, then gold can trade back above 1700. So I'd be looking to buy the yeses. I'd be looking to buy those calls, right? And on the 1700 strike in gold. This is really for 1680, 1690, 1700. I'd be looking to buy those yeses as the market continues to find its legs. The longer it sits in this level, the in my opinion, the more bearish or more bullish the gold looks. Silver is a different animal. Silver has been trading a little bit, certainly a lot differently than gold. If you look at a gold and silver chart and overlay them, they're going to look very, very different. I'm also bullish gold. I'm also bullish silver long term, but I think silver's got some downside capacity. So I'd be taking the nose on silver. We're trading at $18 and 18.88 at this point, and I would take the nose at 18.5. I think silver has some downside activity. Let's talk a little bit about crude. Oh man, crude has been such a great trade. Let me pull up the strike. I wish I can share my screen so you guys can see the strikes. Now, crude, 80 above 82. We're trading at $80.45 a barrel in crude, WTI. Crude is stuck in between, in my mind, crude is stuck in between really two big price levels. 77.80, 77.20 to 81.80. Those two big levels are going to be areas that I'm paying particular attention to. Once crude opens, or crude is open, I don't know what the opening range was, but looks like we're below the opening range. So if we're below today's opening range in crude, I'd be looking for the nose on 7,800, maybe even the lows on $77. If we start taking out these lower levels, 77.80, 77.20, then I would certainly be looking for the nose. The other night, on Sunday night and on Monday night, when I was listening to Jimmy, Canny, and Anthony talk, when I was listening to those guys, and Sunday night when I was listening to Julia and Striz, all I kept thinking, he's such a great kid. Julia's so smart. All I kept thinking about was how difficult it's got to be for those guys to make these picks on a Sunday or a Monday, or even these evening shows when the market's doesn't have an open. And I feel like I've got an added edge here because the opening range is going to set the tone for me in the daily trades. So holy moly, on Sunday night, how difficult it's got to be able to make those picks. But if crude starts to rally and gets back above that $81, $81.80, I will take the yes on 81. I'll take the yes on 82. I'll take the yes on 83. Gold's got three of these huge $2, $3, $4 moves. This is trading like the Nasdaq used to in the 2000s when the Nasdaq was a new pit, man alive, we had these huge ranges with tons of volume, and we controlled it. The computers didn't control it yet. It was still traders on the floor that controlled it. I'll tell those stories as time goes. I'll continue to tell them on Twitter. I'll do a YouTube video if you want me to. But I love this business. There's nothing like it. I love trading in all of its forms, whether you know it or not. We're trading. Everybody talks about how trading is complicated or it's hard. It's not. Brian Shannon had a great line a couple weeks ago. I heard him say, simplicity is the market's greatest disguise. Keep your trading simple. Simplify everything, because the most difficult part in my mind is your mindset. The most difficult part in my mind is what you are bringing to the screens. 90% of traders fail. Why do I want to think like 90% of traders? I can guarantee you, I traded under Pete Stottlemyre for 6-7 months when he was trying to update market profile. I can guarantee you that with that experience, there are many of you guys that have much more and better information and better knowledge of market profile and how to apply that. But I keep my trading simple. I do pay attention to the profile. I do pay attention to technicals, but I want to be able to know, again, 3 things: the market high, market open, high, low, close. 4 things. All I need are those 4 things. I can make money. I need to keep my trading simple. When I keep my trading simple, I'm putting myself in the driver's seat in order to make a lot of money in these markets. I think that the yeses and the nos in these event contracts are simple. I think that this helps us to be able to look at the market in a really simple way and to be able to take effective action in it so that we're able to pull some money out of it. And that's what these event contracts do. They're fun, they're cool. There's something that will help my 17-year-old senior in high school son start to get used to the way that the markets move and how to act. And there'll be something. Obviously, he's not 18, so he'll not be able to do these directly. But he's got some input with me, and when we are making our picks on Sunday night and Monday while we're watching Julie and Striz, we'll be able to look at these things together, and we can be able to say, where do you think the market is going to go and why? And then we can go ahead and make our picks for the week. I think these event contracts have an audience for traders like me who have been around a while, that have had some success, had a lot of success, had some failures, and have learned how to work through those failures. I think they have a place with newer traders who are finding their footing in this business, whether you're trading the names, you're trading cryptos, you're trading stocks. It teaches you how to preserve your capital one trade at a time and how to grow your capital. So, my brothers and my sisters, thank you for bearing with me in my first podcast today with the Place Your Trades Network. I apologize for any inconvenience that having my beautiful, smart, strong co-host Penny Lane is not being with me, and any of the difficulties that any of the reverb or anything had with me. So thank you for bearing with me and helping me find my footing as I got kind of thrown off the track a little bit. I think that the market is going to reveal itself to us throughout the day. So pay attention to the yeses and the nos. If we start below the opening range in the equities, then I'm going to be looking more towards the nos. If we start above it, then again, 36.63 to 17.26 in the S&P. So I'll be looking for those higher strikes. So everybody, have a wonderful weekend. Have a great. I hope this podcast today helped set the tone for the day. Let's get after it. Preserve your capital one trade at a time. See you all on Monday. And as I say to all my traders every day, nobody fights alone unless we choose to.